Hi there, welcome to Commodities Corner. Now, we know that cannabis stocks have been tough securities to own for more than a year, really going back to legalization in 2017, 2018. However, some stocks have held up better than others. Let's take a look at Alberta-based cannabis retailer High Tide. Its flagship brand is Canna Cabana. The company just posted its best ever quarter, in which revenue grew 30% year over year. Now, the company says Canna Cabana was Canada's first cannabis discount club retailer and actually has a loyalty program now with more than 1 million members. We're joined by Raj Grover, founder and CEO of High Tide. Raj, thanks for coming on the show.
Andrew, thanks for having me.
Just remind us, how many Canna Cabana stores do you have and what provinces are they in?
So, Andrew, we have 156 Canna Cabana stores operating across the country in 5 Canadian provinces. So Ontario, Manitoba, Saskatchewan, Alberta, and British Columbia.
And do you produce the stuff at all yourself, or do you buy it from other suppliers?
No, we're a downstream cannabis company. So we are the retailer. We are a discount club retailer in Canada. In fact, it's the first of its kind concept in North America. So we are just downstream with only retail stores. We do have a vertical integration or semi-vertical integration in consumption accessory business, as well as our CBD businesses. But those are online platforms that we cater to the US and international customers. But in Canada, we only have our bricks and mortar business through our Canna Cabana stores. You
say that you're the biggest non-franchise cannabis retail chain. Who's the big franchised one?
Well, there's another chain that's operated under SNDL. They have a large portfolio of franchise locations, I believe over 100, and then they have a mix of corporate stores as well. But we are very much focused on a singular brand, which is Canna Cabana, and definitely the largest non-franchise retailer in the country.
Sorry, what brands is SNDL, just to clarify?
I'm not too focused on their business, but I would have to say I believe it's Spirit Leaf, it's Super Red, and maybe a couple others. I think they have 3 or 4 different ones in their umbrella. Our focus is just to focus on the discount retail business, Andrew, because this is tried, tested, and perfected here in Canada. We're the only company that's launched such a concept, and we're reaping the dividends today, as you can see through our results.
Yeah, that's interesting. I mean, your revenue increasing sharply, and there was no special items in there or sales abroad. Well, you don't sell abroad right now to get that 30% revenue jump.
No, absolutely not. This is pure organic growth. We actually strategically halted M&A to focus on free cash flow generation. Andrew, as you pointed out, almost all cannabis companies continue to struggle, but that is not the case with High Tide. We've been executing for over the last 3 years, so 12 straight quarters. You can look at our record. We've never had a revenue decreasing quarter. It's always been accelerating revenues. We've just reported our 4th consecutive quarter of record revenue and positive adjusted EBITDA, including 4.1 million of positive free cash flow, which is an extreme rarity on both sides of the border. I only know a couple of companies in Canada and the US that even been able to achieve this feat.
Right. So Stifel puts your revenue this year at about $481 million, going to $520 next year. So you're a $500 million company by that measure.
Yeah, absolutely. It's exciting times, Andrew. Like I said, just 5 short years ago, our revenue was just $8.7 million on an annualized basis. And to come to $500 million today, extremely proud of the team, how we've been executing over the past 12 quarters. And that execution won't stop going forward.
You are apparently interested in a NASDAQ listing, but the problem is apparently NASDAQ doesn't want so-called cannabis touching companies to list.
Yeah, we're one of the few retailers that are listed on the NASDAQ, which has its own advantages.
Sorry, let me clarify. You are listed on the NASDAQ?
Yes, we trade on the NASDAQ under the ticker symbol HITI.
Okay, sorry, carry on. Yep.
So yes, we have advantages because we're a NASDAQ traded company, but at the same time, we have to wait our turn to get into plant touching businesses in the US, which we remain very, very excited. Like I said, our discount club model, which is the first of its kind in North America, continues to rise here in Canada with over 1.1 million Cabana Club members and almost 10% of retail market share in Canada. So as soon as we get the green light, there's nice positive momentum in the U.S., although it remains unpredictable and it's a polarized landscape when it comes to cannabis legalization. But as soon as we get the green light, we are looking forward to planting our flag in the U.S.
I want to hear about that, but just to clarify, so you're listed on the NASDAQ, but you're banned right now from doing any so-called cannabis-touching business in the United States.
That's correct.
Okay.
Major North American exchanges, which is Big Board TSX or TSX and NASDAQ, don't allow us to touch plant in the U.S. And this is why we strategically, pivoted to ancillary cannabis businesses in the U.S. And we operate 3 of the top tier consumption accessory platforms in the world, 2 in the U.S., all 3 of them based in the U.S., and then 2 of the top tier CBD brands in the US and 1 in the UK. And we've accumulated over 4.6 million international customers, Andrew, out of them 3 million in the US. So as soon as we get the opportunity and, NASDAQ allows plant touching businesses for NASDAQ listed companies like High Tide, we can convert a lot of these customers to start buying cannabis products in the US.
Now, Stifel likes the look of your stock. They have a buy, but they say that you're looking to amend payment terms on a convertible debenture, $9 million, due early in 2025, so it's a ways away, and extend the maturity date of a term loan of $13 million that expires at the end of next year. So there's quite the time interval there. So what's that about? Why are you looking to amend the terms of that debt?
No, look, our debt is extremely manageable, Andrew. I'd like to point out our debt is roughly only $39 million, and we've just reported a $10.2 million of adjusted EBITDA, right? And even if you look at real EBITDA, we've reported over $7 million. So this particular debenture you talk about is with a strategic investor, and we just want some flexibility instead of doing dilutive offerings, et cetera. Just amend those terms so they're more flexible for us to pay back. But we're not concerned about our debt whatsoever. We've been managing our business really well. In fact, our cash balance grew to $25.7 million, I believe, which was year over year up 40% and sequentially up about 40%. So everything is moving in the right direction for us.
Raj,